Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis to overlay structured trades on, and these are available to everyone in the Bookmap Discord TraderLab community, and there's no cost for it. The idea of the TraderLab is to help traders separate the fantasy of what trading is from what it actually is. Trading is a business as opposed to a video game or an impulsive response to market rotations. The idea again is that you understand what you're actually, the environment you're in, and to differentiate from the typical behavior that we see among developing traders, developing retail traders especially. It's a common problem, you might say, to sustainability, and that is because we're controlled by our impulses, our fear, our FOMO, the need for certainty, the psychological idea of avoiding risk or pain. All these are built into as part of our primal wiring, and many of us attempt to accommodate those needs by trying to squeeze risk out and create certainty. But that's not the environment we're in. We actually have to adapt as humans to the actual environment. And this environment, in my opinion, and I'm doing this 47 years, and I didn't know, when I started out, I was just like you, except when I started in 1980, there was no computers, no PCs, no internet. All you did was a book. You bought a book. Now, I even went to the CME, took a classical bar charting course, and it was, on some levels, it was the most exciting thing I ever did because I was brand new, and it was also potentially the most destructive thing I did for my development as a trader. And you're probably going to wonder why. Well, I'll tell you a little bit about that as we go along. First of all, let's take care of business, and I've got a lot to talk about today in very limited time, so I'm going to try to go as quickly as possible. Please take notes or review this stream if you find it interesting, so some of the ideas you hear and see might stick. And if in your education, this is a business, you have to create a process of self-education. Now, I can help you, I can guide you, and so can other educators in the Bookmap ecosystem, if you will, but in the end, you're going to be responsible for your outcome. Nobody can do it for you. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If we get into real time, we'll talk. By the way, can I get a check in the Bookmap Discord? I am not seeing anything going on in there. Oh, thank you, Marty. Marty, where you been? You must have fallen asleep. All right, everybody, let's take a look. Now, remember, the process here is not complicated. This is how we are organized in the TraderLab, and basically it's how does the market work? It's an auction. What's too high? What's too low? What's fair? And that process or rotational concept, if you will, I'm not paying that when you go to the store. Oh, it's on sale, 10 in the cart, and then a fair price. Well, what we want to know and what the market's trying to figure out is what's fair. Now, the issue for us, of course, is time frame. What is fair in different time frames? Think of a vertical integration of time, if you will. However, when we get to order flow, it is not time-based. It is behavioral. So how do we see order flow? Well, we integrate order flow in the time frame we trade. We use the volume profile only because it's the true representation of buyer and seller interest. It is not time-based. The volume profile is volume-based. And context, this is the big thing. The context, this is the one, as they say, will get you. Why? What is the time frame or rotation you operated? As an example, right now, is the higher time frame up or down? Well, I'm going to step out on a limb. I'm going to say down. But what about this morning's trades? Longs. How do you reconcile that conflict? Well, this is what we talk about in TraderLab, because you need to have a plan that isolates these different time frames and then overlay the time frame you have vetted, which means you have a statistical edge, overlay that, and if you have an edge in your time frame that aligns with you psychologically, then you can generate metrics, and then you can know, even though the outcome is random, whether or not you have the potential for sustainability. Now, one other piece, and then we'll get right into it. There's 60 PDFs of structured trades that I've shared. Some of these go back to 2020. I was never intended to be, an educator. I'm just a full-time trader. That's my thing. But I was asked by Bookmap, since I was sharing things, if maybe I would do a little education. Who knew, right? So, but there's 60 of these, and these are actual trades, and some are just screenshots. These are actually, you can see the entries, the targets, and some of the process. Now, I want to caution everyone, there's no plug and play. So before you do that, don't bother. You have to reverse engineer everything. You have to know when trades are qualified. This is part of the process of building a trade plan and potentially creating sustainability in the business of trading. Now let's go take a look at the higher time frame and we'll get into it. Now this is day before yesterday, okay? And this is very important to understand how this all fits together. These are profiles, obviously, and what they're doing is they're measuring the volume. And when you get high volume, we'll put a little line on it. And where there's low volume, you'll see red. And what's really happening in all time frames is a rotation. Remember, it's on sale. I'm not paying that, too high. And then fair. This is like a store. Think of it, distributions or stores. Very simple. If we find a price that might be too high, and we leave the store, then we're going to move to the next location and do the same thing. Now we know that's too high, this was too low. But if I fall away from it, now it becomes what? Too high. See it? And down we go. And now this price, and so forth and so forth. Now, as I go into the full profile versus little inside profiles, if you will, or little distributions, the highest volume is here. Think of it as a higher time frame retail price. Same concept. Now here's what's important. From this swing, the all-time high to this swing low, all that volume is represented up to here. From this swing high to this swing low, all the volume's in here. Now you'll see why. And then in here, from this swing high to this swing low, all the volume is here. So I'm breaking it down by swings, and everybody does it differently. I'm not one to comment on what's right. There's no rigidity. This is more of a language, what speaks to you. So let's look what the language says. Over here, when we rotate down, this is too low. It's on sale. If the price is too low, we leave it. If we come back and it's still too low, we leave it. If we come back and it's still too low, we leave it. We leave it. And we test it, we come back inside. Now, what about this one up here? If this one is too low, support, and I flush them out under support and I close inside, I'm back inside. Where was too high? It was here. Is this making sense to everyone? This is a higher time frame, and we need to understand where we are. Where are we? Too high, and what was this? Too low, which becomes what? Too high. So now what do we do? Well, now I'm trading below this key level, right? Well, trouble. So let's see now what this says. Now, we closed Friday on the low of the day. It was like the end of the planet. We'll see you later. Where's the escape hatch? And then we gapped yesterday. And my trade, now just so you know, it doesn't matter. Trade plans are something that it's not a rigid process. Trading is not rigid. Remember, it's an alignment business. So yesterday, now we have a gap from here to here. And for yesterday, now this is day before yesterday, don't forget. My plan for yesterday was to take out this high because there's going to be stops for these shorts, and fill the gap. And the target for yesterday was this, roughly. Now again, there's no precision. Think horseshoes and hand grenades. 6805-ish. No precision. So we're not in the business of precision. We're in the business of maybe. So let's look at yesterday, what it did. What it did is we went up. We did not get the gap. And then we had our sellers. So we failed yesterday. And now we're in this retail price of this distribution. So as of yesterday, too high, low volume area, fair in the, so this up here is all unfair so far. And the high, think of how this might work. If the price gets too high, remember, I'm not paying that. It could come back to the high volume or the fair price. What's too low? Well, this is too low. Somewhere it's too high. And then back here. Now let's look at today and just see what has happened. Then I'll show you the actual trades that are based on the TraderLab. And again, clueless. So, but not ignorant. So what was the goal? Yesterday was to do this. Okay, the target was here. And if you go back and review yesterday's stream, this is all at the top of the stream. And then it's like, we'll go from there. Any questions so far on the higher time frame, the trade plan, and the reasoning? Not for what will happen, but for what might happen. And how we doing in YouTube, guys? Welcome to the TraderLab. Thanks for visiting us today. How about Discord? Does this align with your plan for today? Doesn't have to. You can have a different plan. There's not right, wrong. It's just, we'll see you. You know, it's like, maybe it'll do this. Maybe it'll do that. Maybe, I don't know. You know what? We are in a business of maybe, not in the business of being right, not in the business of prediction. Have you ever thought about this is not a business of saying what it will do? It's a business of what it might do. Does that make some sense? Thanks, Stephen. Thanks, Jim. Okay, let's look at now. What are we doing here? First of all, before I go here, we have to look at, here's yesterday's high. So what's going to be above here? Buy stops. And there's the gap. What's above all this? The stopateria, right? What else do we know? Let's find out. Yesterday's low. Oh my goodness. And what about yesterday's low? The ETH low. What does this say? Let's come back to the language of the market. The market speaks. The thing is, at least for me, backwards looking indicators don't tell me what's happening now. Order flow tells me what's happening now, and the basis of the participant behavior. So participant behavior, what's too high, what's too low? It's just like you going to the store and shopping. It's too high, I'm not paying that. If it's on sale, 10 in the cart. Or it's fair, and you pay retail, that's okay. All right? So let's take a look. If in the ETH I test yesterday's low, and maybe I get under there and it's too low, and then I come back across the range. So let's start from there. So now I know, and yesterday's value area high, very important level. Okay. And the overnight volume point and control is here. So I have and that high volume area, I think I just showed you. Let me just make sure. 55. Remember, this is the fair price, and it's located right there. So now that you know that, and this is part of a trade plan and what you would do if you're in TraderLab and you were interested in a plan. Because if you don't have a plan, you're playing a video game, and that doesn't tend to work out so well for sustainability, if that's your objective. If you're here to have fun, gamble, okay. But TraderLab is really about the business of trading and understanding that you have choices you can make, and also not everybody is suitable for this business because it's going to be more difficult than you can imagine. And the part that's difficult is not learning how to trade. You can do that if you do the work in the TraderLab. What is difficult about this business is operating in randomness, you say. I don't know how many educators actually talk about that. It's all about setups, and chat rooms and all this kind of stuff. Well, there's no cost for TraderLab. What I found about the hardest part of it for me was seeking certainty in an environment where it doesn't exist. How can you solve for something that doesn't exist? Think about it. So if it doesn't exist here, and we're going to spend our time as developing traders with finite resources, what's finite? The amount of time you can give this, and maybe the amount of dollars you can invest in yourself. But if you don't understand the business, you're already on your way out. You just don't know it. And I agreed to do TraderLab because why? Why do educators, and when I think of educators, I'm thinking there's a lot of noise now out there that never existed when I started, and it's not a blessing, in my opinion. So we are opening higher. Let me find the open. Inside of a gap. Let me just come back here a little bit. I just got to check something here. Sorry guys, I'm a little bit trying to find some levels here. Hold on. Yes, it is. So I can't tell. Okay, yeah, we opened over. I couldn't find yesterday's high. It's here. So we opened higher outside of yesterday's range. That's called, of course, a gap. So we're opening out a range and a gap. What does it mean? The market's out of balance. Now, there's two questions we have to ask ourselves. Now, remember, this is not in the, quote, literature. This is what you have to learn. What is the condition of the market? What do we know? Higher time frame, down. And how does the market work? Remember, how does the market work? You should follow my stream so you understand. What does the market do? Market goes up, squeezing the shorts that are in here, to go down, taking out the longs, getting the shorts trapped. Then what happens? The shorts are in here, become buyers, and they become buyers. Once the shorts get squeezed out, what happens to the longs? They become sellers. And it's kind of, and this is what creates our rotation. So when you look at the higher time frame, and don't forget, this is the key level so far, at least in my world, anything below here, the trend's down. So I know if I'm trading longs, which was the plan for this morning and yesterday primarily, and it doesn't mean not to trade both sides. It's just what is the condition of the market? And this is not going to be anywhere other than your education to understand market mechanics. And most traders are hung up on mechanics. In other words, I'm a mechanical trader. This happens, I push the button. No. This happens, and it needs to be in alignment. That's the difference. So that's why mechanical doesn't work. So if you've been doing that, you might have experienced what I experienced. It's called Trader Groundhog Day. Anyway, that's a target. So why? Market is short. What does the market do? Market goes down to go up. And once we squeeze out these guys, then what? Now, subject plan, you can sell it. So it's longs in the morning, now shorts, and then where to? Not a recommendation, 55-ish. We'll see. And not necessarily today, not necessarily ever, maybe never. Not my concern. Now, so we're opening. So here's what we have to ask ourselves. Are we going to get what's called responsive selling? That means the gap, and then you get your sellers, and the thing goes down, to the sub-basement. Or, here's where the market mechanics come in. If we know the market is short, and there's a gap, what do you think is in the gap? Buy stops, right? If we know that, do you think we should sell on the open, or should we think about buying? Here's a question for you. Now, it's time frame specific, isn't it? If the higher time frame is down, would you take any longs? Well, me, yes. Why? I got buyers in here. I already know that. Who are the buyers? The shorts, right? So I already have buyers built in. And by the way, what happens to the buyers? They become the sellers. So as a day trader in the TraderLab, I'm going to trade with the buyers early because I've got buyers already that are trapped. So I call it fuel. So what I figured out over many years was, these rotations. Well, what about rotations? It's like, why does the market go up, go down? Why does it go up, go down? And it rotates. Why? Why does it rotate? Because there's traders on both sides, and if the price gets too high in any time frame, you're going to run out of buyers. Then where are the sellers? The sell stops under the market. Does this make sense? Give me a yes, give me a no, or ask. Let me know on YouTube if this is making sense, and also throw a thumb up as long as you're at it. So we're opening in a gap, and what we're looking for is, are we going to get the sellers immediately? Well, in my book, no. But you could. So I have to look. So let's take a look. This is the RTH open. And remember, I'm opening in a gap, and I'm opening higher outside of yesterday's range. Here's some statistics. You have to vet these for yourself, and then I'm going to race along. So please focus or watch this again if you miss it. There's a 98% probability I take out the first hour's high or low. Remember, you have to vet these. There's a 97% probability I take out either the ETH high or low. There's an 81% probability I take out the overnight volume point of control, which is way below us. There's a 68% probability to take out the overnight mid, about a 68% probability to take out previous high or low. I think we're doing that already. Then the previous value area high, 54%. Let me see if there's anything else of interest. And the point of control, which is the high volume from yesterday, 38%. That'll get you going. Everybody tracking? Yes? No? Not sure. YouTube? Are you with me? Let's go. RTH open. Now I'm going to share with you structured trades. Now again, there is no plug and play. You must understand the business you're attempting to be in. And I'm going to suggest most of you don't understand it. Too much noise out there in influencer world, and anybody, can throw something up on YouTube and now they're an expert. There's no such thing. Nobody's an expert. You know what we are? Operating a random environment. The expertise is developed self-control and metrics. That's where expertise is developed. It's developed doing work that nobody wants to do. None of us want to get spreadsheets out, figure out what works. We want to push the button, the dopamine fix. And if you're not doing the work, you probably don't understand why. It's all psychological. If you're interested in sustainability, you're going to need to do what most other retail traders don't do. Does that make sense? So we're opening in a gap. Okay, we're over yesterday's high. There is a reasonable probability we're going to test yesterday's high, and subject to whatever happens, happens naturally. And then where's the fuel? Above us. High probability to get to the ETH high, and then we have the gap, right? So if we're in the gap, there's the other side, and there's going to be stops up in here. So the goal is to fill the gap, and what was that target? I lost it again, but write it down. I got to give you the target. I'm just going to this is called value area low of this day, and we have this low volume area. Remember I was talking about distribution, just as a reminder. Too high, too low, retail. I'm not paying that. Get in a car, leave the store. Then what? Too high, fair, too low, retail price. Yeah, I gotta be kidding. I'm out of here. Leave. Now, this is our fair price for this whole range of volume, which means there's a good chance we're going to get back here at some point. And this is the value area low, and that's the target. And it was a target yesterday, so nothing changed. about 4 or 5. Okay, so write that down. Value. This is a value area. What's a value area? 70% of the volume on this day took place in here. Notice the wick. Notice we tested this outside edge, and I'm not paying that. Get out of here. Leave. Gap. So the gap has what? Here's what's above the gap. Don't forget buy stops, which we got here. And I was looking for this on this day. Doesn't matter. When I say looking, that's the plan. What does the market do? Let me know. Hindsight, I always know. But we don't work with the benefit of hindsight. We have to speculate what's going to happen. So that's what statistical probabilities are. So anyway, this is the RTH opening in the gap. So now I have to be looking for a couple of things. If I have a small gap, I can get some selling. And if it's, depending on the condition of the market, we could open here and go straight down, right? The other part of it is, since I know I have a gap, see, here's the key. What do I know? I got those shorts. I'm going to squeeze them. But from where, you're going to ask me, and I'm going to say, I don't know. So what do I do with I don't know? Here's what I do. I go, I know I don't know, but I understand the context or the condition of the market. I know I might get some sellers in here who are going to sell the gap because we're in a, quote, maybe bear market. We'll leave it up to you. You can let me know what you think. And in day trading, it's, again, alignment. So here's what I know. Market opens here. This is called developing volume point of control. It's the high volume. Now, it starts at 0, so this is like your retail price. And if it's too high and I leave it, this becomes resistance. Now, I'm in microstructure. We're not even in a second yet. I'm just giving you some concept. And if it drops down here, this is support. So I have resistance. Now, this is happening not even a second. So this is not actionable. This is language. Now, I get buyers here, and I have a sweep. When I get a buy sweep, and these are some of the tools in Bookmap, and remember, guys, mechanical doesn't exist in this business. Sweep says potentially counter rotation. So if you are using a high tier order flow tool, you're going to know this is resistance. See it? It now becomes support. What's down here is support. So, but it's only, look, 3 seconds. So remember, not actionable, jaw on the floor. And just like you, I'm going, what's going on? And I'm waiting because I don't have a trade right here. So now I'm getting some sellers. So, okay. And the sweep puts me on alert to the potential. So let's watch what it does. Market's going down. Remember, yesterday's high, statistical probability, which I probably didn't give you, is a 67% probability. All right. So are you going to get long before a 67% probability? Now, if you get a buy, it may never fill the gap, right? It can open higher, and we'll see you later. I'll send you a postcard. Nobody knows. But because of the sweep, I now am looking for the counter rotation. Now, when I say looking, all it means is maybe. Now, I'm going to take you into more microstructure. I know I burn a lot of time off with this, but this is really the auction. This is kind of how things work. Variable high volume node. Basically, what high volume is in all time frames, and there's no time in order flow, or at least for me, time is not at all material here. It's the participant behavior. So we take, at least for me, I take the idea of 5 minute, 2 minute, however you slice and dice the market. Time is for me, it is a constraint to analysis. It is not supportive in this time frame, if you want to use the term. And again, no time. So there's the gap, and this is resistance. So let's look over this real quick. This is support, break high. This is resistance. Support, break, support. This is resistance up here. Break low. what's this? If this was support, it can now come maybe resistance. I don't know. Look at that. Isn't that interesting? So, shopping. All right. Fill the gap. Going to zero, right? I don't know. Let's go. So let's start looking at a couple levels in here. So what I'm seeing now is I have my sellers. Now, again, I know there's stops above me. So now I'm testing yesterday's range. So what does this mean? Well, the market opened out of balance. So I'm thinking I want to trade in the direction of the imbalance. But right now I'm seeing responders. In other words, I'm getting out of here. Or those who say, oh, really? You're opening higher here. Have some more. I don't know. So let's talk logically. We know the market is short. We know there's buy stops above us. What about these? Isn't this the same thing in a short time frame? So let's see what happens here. My plan, same plan as yesterday, and actually pretty much the same plan as the day before. Now, when I say plan, if I'm looking to get long, I get short, I get whatever, because I adjust. So my plan isn't one-dimensional. It's like long side, short side, no side. And when it changes, I have a process that's very simple. It's a condition. I built trading systems when I was managing funds because I was across a lot of asset classes. And this is position trading years ago. So I was managing a substantial amount of dollars. And in order to try to deal with it, I built systems. And I still use aspects of it today because it's all logical process. In other words, like this: if this, then that. If not, then what? So if a condition exists and it's true, then you go down a track, if you will, of logic. So if this is true, then certain trades qualify. Where might they show up? You know what? And then if something changes that has been quantified specifically, so if not, so if this, then that, but if not, then what? So it's a way to organize and quantify change. Okay? Does that make sense? So that's process and that's business plan. So now the market's coming down. I'm seeing my sellers and I'm testing inside yesterday's range. So for all I know, not going to work. But I do know I have buy stops up here, opening swing high. I'm going to label it. And I do this every day. I label opening swing high, opening swing low. Where are those things going to come up? I have no idea. Do you? I don't. I gotten away over the years. What I had to do was change my beliefs about certainty and knowing. Instead, I had to put myself mentally in a place of knowing I don't know. And by knowing I don't know, I've accepted randomness. So here we have sellers going to zero. Who knows? Chop, 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 break high. Now this is a microstructure, and there's nothing I can do with this. It's a long, but I know I can't do anything with it. Watch. Where's our resistance? Remember? Right there. So now, what do I know? Very simple. What do I know? Sellers are here. I found absorption here. No clue. Remember, hindsight, very clear. And I'm testing yesterday's range. What I do know is in this condition, if I test yesterday's range and come back outside, now I have the fuel. You see how this might work? I have the buyers in here. The buyers are in here. You're going to say, well, Tom, those are sellers. Exactly. They're sellers. What do sellers do? They have buy stops, don't they? They become the buyers. That's it. This is not complicated. Now, if I get buyers, though, here, what happens in here? Now I get the sellers who are going to put their stops under the opening swing low, if this is the opening swing low, which I don't know. I didn't get to look at it. I was very doing other things this morning. So I haven't seen this stuff other than I know kind of the broad stroke, but I haven't seen the actual trades. Resistance. This is key. So here's what I know. What I know is buyers are here. This is a trigger. Now, the fact that it's a trigger doesn't mean anything. You're going to say, well, then what good is it? I'm going to say it's a suspect. So what I do when I see liquidity and interaction and a response, well, and what does this mean? Okay, this is the limit order book. It's called the heat map, and instead of looking over here at what's going on, the ads and the pulls, I can see it here. So when we come through here, these are the sellers, these are the buyers. There's an iceberg, there's some stops coming out. Thanks for playing. They get a coupon to the buffet. And there's this chop, chop, chop. Now here's the thing. If this is now still too high, I'm going to keep going. If it becomes too low, I can break above it, and then it might be, underline might be, support. VPOC migration. These are tools and things I made up many years ago for my own trading, and I shared them in the TraderLab. When I developed this stuff in the mid-1980s, nobody was doing it. So, and it's neither here nor there. It's just I'm saying is I've done this for a long time. So here's what I know. In hindsight, my buyers are here. Look at the rotation. So here's my down rotation. This is absorption, and you can see it in the delta. And here's another little sneaky little piece. I'm just going to throw some things in. You'll notice I'm coming down, sell, 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 more sellers. And now what about here? What happens here? Lower price, delta, going to zero. But look at the delta. So this is called delta divergence. You guys heard of delta divergence? So, and again, we won't know until this. And you can see the buy delta here. So I ran out of sellers here, absorption, and now I have my buyers. And again, this has to get here. So now I know I got my buyers, and I know this might be, again, maybe too low. I know this is too high, and there's my resistance, and I get VPOC migration saying this is too high. So I have too high, new retail price, resistance, support, and opening swing high. Okay, and opening swing low. Let's see what it does. Watch. VPOC migration. Oh no, going to zero, Tom. Big trouble. Oh gosh. What happens when this mentally? What happens to you? What happens to me? I'm going to get stopped out. And I have regret. An emotional response. But let me tell you what else. I also know that it's noise. And it's coming from the lunatic under the hood, my primal wiring to avoid risk. I've learned that. Unfortunately, I paid a fortune for the education because I didn't understand that I was pushing back against primal wiring. So this is too low. Let's look at the behavior here. Microstructure. And I'm going to move on, but I want you to understand how I can do what I do, and I don't use indicators. I'm just measuring volume. Let's look at the language. If we open this up, remember I was showing you distributions. Where's the volume? Look to the right. You see this? This is my retail price. So, sellers are here, buyers are here. Volume, if you look to the right, is that little node sticking out. This is the fair price. If I leave it, break high, this is a trigger. Now, where's my support? There. So I come back and test, break high. I can buy any of this if I choose, and my stop subject to, and you have to vet everything. I'm not saying this is a good idea. My stop goes under here, not there. Just telling you. Why? Because we can get sellers again. We can come down, take these stops out, and get the buyers that are here may go, oh, really? Here, throw 10 more in the cart. And up we go. So I don't do that. My thing is make it hard for the market to take me out. Instead of being, our nature is to avoid risk and pain. Primal wiring. Don't put your hand in the fire. Look out for the saber-toothed tiger. We're wired for that. So without even understanding what drives us to make choices, we automatically move our stop up and micromanage. Why? I don't want to lose more than I have to. Have you ever thought about that actually helps you potentially lose more than you need to? Because you're putting your stop with everybody else, and that the buyers who are here, if we just come down and take inventory, they might be there. What if you do the work? You will know, should your stop go there or should it be out further away, so the market has to come and get you? Which one is better? Do you know the answer? Most of us are so busy wanting to click the mouse, we never get the answers that to create sustainability. And that's why the TraderLab exists. Help you understand the business, and if you do the work, to get some answers that are appropriate for you. So this was too high, remember. And where's the buy stops? Here. So I got sell stops here, I got buy stops here, I got shorts in here, and what's happening? And when I have what? Stops above me. So we have a long here. These are longs. This is the uh-oh moment, and here's what it can do. When this is coming down right here, you can see its resistance. So if I'm getting long, I got resistance, but the trade fails under here. It shifts down. This is resistance. If I break above it, it becomes support, and then resistance is going to be here. If I get long here, this is a specific trade. I made it up. It's called VPOC migration. You have to understand the condition of the market. Otherwise, trades don't work. It isn't mechanical. Oh, it did this, I get this. No. What's my probability of getting here? Statistical probability. You have to vet. Don't forget, 98% probability to take out the about 98% probability to take out ETH high low. Well, the ETH low already tested yesterday's low. What does that tell you? Maybe you're going here before you go there. And where's my buy stops here? Do you see how the pieces come together? And let me go back to this. When this shifts down, I got resistance there, I got resistance there, but don't forget the context, up, and I got resistance right here. If I break above it and I don't go crash, then what? I can buy this, and I got resistance there. See the behavior? It's just the way the market works. And what else? Buy stops there and everything else, and a 98% probability. So longs there, and then helmet. Watch. These are structured trades. This is just TraderLab. Now, look. What is this? Resting liquidity. Here's a couple of things. If I break below this, this becomes resistance. Let's just look. And what else? Where's my first target? Wasn't it there? Right? 92. Got to show you again. 92. Where is it? Hold on. 92, 92. 79. 92. So 92 is an outside edge. But what else is here? A gap. You see? So I already know I'm testing this distribution of volume. And out here, this was too low. It becomes too high. This one. So I can now go down. This is a high time frame. Now I go down a little bit lower, intermediate time frame. It's this. And then this. Okay? So back. So I want you to know, you see these levels out here? It's all coming off the higher time frame. 98% probability, figure, scale. Now what? This right here is important. But what else do I know? I got buy stops. So what can I do here? What is this, Tom? Wait a minute. Wake up, Tom. You're going to fall asleep here. This was too high, right? This now is too low. Resistance, target. What's this? Support, isn't it? Is it? I don't know. Let's see. VPOC migration. Support. The old concept we all learned. Resistance becomes support. You can get long here, structured trade. Again, up to you. Now I got my ETH high, but what else do I know? I got shorts trapped. Thank you. We need those sellers. So this is TraderLab. Now we filled the gap, I think. Yeah, gap, and there were stops. And now, where was that target? Well, let's look at this. And VPOC migration. So let's look. I'm going to put a little box around this. Now, there's a few ways you can operate using liquidity. And everything is random, so there's none of this knowing what's going to happen. I have no clue. So I've given up predicting. I know I don't know. It's random. So when this happens here, what do I know? I got a seller here, and I can see it in the order book. If I see resting liquidity, I know that I got a seller. Now they can cancel, they can pull, they can add, this is part of the joy of randomness. So if I come here, I can, two things. This is resistance. What's the concept? If I break above it, it might become support. What else do I get? VPOC migration. What happened here? Too low. VPOC migration. Too low, right? Going to the moon. What's this? VPOC migration. Too low, right? And what's this? When I'm above this, this is support. This is support. Now, there's a couple conditions now that we might transition into, and nobody knows. When this happens right here, I'm on alert that there's a potential change. Let me tell you what it is. The market is directional, right? Subject to how you define direction and time frame. What I understand is, and you do too if you're in TraderLab, the sellers in here had buy stops over the opening swing high. Now I have longs in here. Where's the stops? These guys, the micromanagers, the risk adverse. And we're all risk adverse. It's just how do you manage your trade? Where does this trade fail? Now here's a trade management process, and you have to vet this. It is time frame specific. Remember, I have a target up around, I don't know if it was 68.08 or someplace like that, which I showed you already. Resistance, VPOC migration, break high, support. Watch. Now, when this comes across, it sets up a different condition. It's called reversion, mean reversion. Underline the term mean. What's mean about mean reversion is we've transitioned from directional, potentially, and I haven't seen this, so I don't know. But I would already be looking for, okay, I come across this. Once I come across this, directional up, sell stops here, resistance becomes support, retail price, and here's the idea. Bing, bang, or bing, resistance, rotation. Now, if we rotate, and remember where the stops are, come back to the concept. Sell stops are here, sell stops are here. Think about it yourself. You are risk adverse. Well, here, I'm risk adverse, you're not. And what do? I trail my stop. Why do I do that? Oh, I don't want to give it back. What is that? Fear of loss. But do I know, where should my stop go? Should it be here with everybody else who's a retail trader? Should I be over here? Should I be right under here? Or should I be out here? Where should I go? Do I know the probabilities? You got to keep records. Watch. Resistance. Who knew, right? I don't know. Do you know? Don't know. So what happened here? Stops are here. We take the stops out. There they are. Stop an iceberg detector. These sellers are absorbed. Well, that's wonderful. But what about this? My sellers are still here. There's the icebergs. Break low, resistance, and now I have my VPOC here. So this is rotate. Right here, I'm balancing. When I balance, the condition is changed. Now the condition is from directional to this. two-sided trade. So it's a plan in a plan. So if we think the trend is up, there's fuel above us, there's buy stops above us, we have an open target, then what? Longs until it changes. So resistance, and the other part of this VPOC migration thing is what? Up or down. I know. Every time I say that, you're going, gee, Tom, yeah, I know. I don't know what it's going to do. Do you? But when it comes outside, now I know I'm rotating and I have to be thinking about where's the stops, where's my liquidity, and the condition now changes. Call it this, higher time frame down, going for the short squeeze. Remember, not the same as getting on the bus and a leisurely ride. This is counter trend in a higher time frame. Okay, so day trader, that's what we do if it's part of your plan and vetted. So once I cross over, now my plan is being changed to mean reversion. So trend up, short squeeze, short time frame, outside in trading. That's what reversion is. And remember how reversion works in all time frames. I'm not paying that. And then somewhere out here, if this is the retail price, high volume, it's going to, remember, your tuna costs $1 a can here. It's 50 cents somewhere out here, wherever it is. And if it comes out too low, and that's the actual fair price, what happens in the store? We throw 10 in the cart, the buyers consume the sellers, and then the sellers either pull or are consumed, and the buyers have to pay up until we come back to the fair price. And then if we find too high, we ran out of buyers, and then we're going to rotate. So that's rotational trading. And nobody knows where the outside is. I don't, you don't, so there you go. But this is what's going on here. Too high, and then where's the outside? The hard part of reversion trading is where's the outside. That's why I call it mean. So here, and I got nothing here. Okay, I can't do anything here. There is a structured trade out here called VWAP to VPOC. It's a reversion trade, and this is more structured. It didn't happen, so subject to your plan, either you got nothing or you have another way into this. I'm just going to leave it at that. Notice what we do. Resting liquidity. We find absorption. There's your icebergs. Where do we come back? To the retail price. If it's too low, and we know this out here is where our buyers were, and you'll notice our sellers were here. Buyers get above the sellers. Test. I'm not going to say anything more about this except this is more advanced. We'll leave it at that. But let's assume you have nothing to do. You're asleep in your Barca lounger. Now, where's our resistance? Isn't that resistance? So buyers, so we see the buy delta. What does this mean? Well, those are sellers, those are buyers. Think Pac-Man. So either we're going to consume the passive sellers, the icebergs, their limit orders, or the limits are going to overwhelm the buyers. And if that happens, then we're going to what? Rotate. Does anybody know? Nope. Where do we come? Back here. You notice how we just get under this? The reason, in my opinion, at least my experience, is that's where in this leg, these buyers, their stops are there. So for me, now again, how you manage your trade is something else, up to you. Now I get taken out of trades, whatever can happen happens. I just follow a plan, and I'm past this thing of going, gee, I could have got more if I did this, or I should have. I don't know. Hindsight, we all know what we should do, and once you understand the business, you're going to know you don't know what's going to happen. Now, liquidity. Remember what the target is. You wrote this down. The target was this, which is around 4 or 5, somewhere in here. Okay, so for me, that's the exit. I don't even think about it past there. And if it goes past there, then that's okay. That's my plan. Again, there's nothing more than that. So let's look over here. Let's assume we're long and we don't know anything. which we don't anyway. And I get the sweep. Let's look at some other elements in Bookmap. So I have resting liquidity here. Sellers, there they are. I break high. Now right here, and I have a sweep. This suggests to me the potential for counter rotation. Now, subject to your plan, if you know this is too low, which you only know in hindsight, that's life. We got to get over it. What do I know? Wasn't 4 my target? So for me, and again, I'm only talking about me. I'm not saying this is any good for you. I'm just saying this is what I do. I just work targets. So for me, my trade would be over up in here. Okay. But, and if it goes on, it goes on, it's okay. I'm not in the business of trying to pick a high or low. Remember, at the top of the stream, I said when I first learned about trading, went to CME, took classical bar charting, it was all measured moves. So I started in the business thinking that you predict what it's going to do, and that kept me on a path of not a good path, because I thought the business was squeezing risk out and being right and predicting. Oh, I knew it was going to do this. Oh, it's going to do that, and I had to completely change my thinking to I have no idea, and relieving myself of being right and accepting randomness changed a lot for me psychologically, because I was no longer in the business of it's going to do such and such. How about I don't know? So let's act accordingly, follow a plan, and work with statistics, not prediction. What are you doing? So this is a sweep. This is support. Right here suggests counter rotation. Watch the behavior. If I get through these sellers, then where's my next layer of sellers? See the resting liquidity? I got them here, and I got them there. So I can, using the heat map here with Bookmap, I'm going, I got these guys, I got these guys, and it doesn't mean the market has to go anywhere, So sweep, looking for the break, this becomes support, going to the next level. Now, they are selling. Sellers are here, sellers are here. I got this. This now becomes resistance. No clue. Sitting here with the jaw on the ground, as curious as everybody else, but I'm already out of the trade, don't forget. And now the lunatic under the hood is saying you should have stayed in. You ever hear that in your head? That judgmental self that criticizes you doesn't say you did a great job following your plan. It says you coulda got more. Is that you? Well, it's me and you. So the thing to learn about yourself is you are going to have these responses. Same thing. Let's say you didn't get long and this thing is up 20 points and you're not in the trade. Do you know what's going to happen psychologically? I do. For me, I'm going to feel FOMO. I'm going to start looking to get in. I don't want to miss it. Or I do miss it, and now I feel like I lost something that I never had, but my emotions say, you lost that 10 points you could have had. Let's get it back. Is that you? It's me. The difference is I already know about these things. And I also know, because I created something for myself many years ago called an error cost calculator, because, we journal. You guys all know about journaling. You make a note. Yeah, I took this trade. I bought it here, sold it there. I did this. I did that. What did I do good? Could I do better? Oh, I FOMO'd in or this, or I bailed out, blah, blah, blah. Turn the page. That's the end of it. What do? Wake up the next day, do the same thing. Do it over and over. And then you say, I'm not going to do that. I'm not going to bail out, because after you bail out and you save a tick, now it goes on 20 points. And now you're going through all this emotional noise. Well, instead, recognize what creates it, experience it, and acknowledge it. Yeah, I'm feeling FOMO. Well, I already know, because of this error cost calculator that I was throwing anywhere from $5,000 to $15,000 a month out the window. And when I wasn't quantifying it, I was just having that short-term emotional anger at myself and self-judgment, but I never could rectify it because it wasn't tangible. It was specifically emotional. So when I created the error cost calculator, and one of the TraderLab participants has updated it, and it is available to everyone at no cost in the TraderLab, the error cost calculator, and you can plug in your errors and quantify it. What would you do if you knew that you were actually sabotaging yourself? And we all start out doing that, by the way, but we never quantify it. It's intangible. So if you don't have tangible metrics, which means probabilities of getting risk neutral, do you have an edge for a specific trade over a random distribution of outcomes? You need to know that. Otherwise, you're just playing, gambling, entertainment. Fine. I always say if you can entertain yourself, go to casino with your buddies, throw a few dollars down on the table, get the cocktails, get the ticket to the buffet. You're entertaining yourself. If you want to be in the business, you have to change how you don't come into this like it's a video game. You have to come into it like over 90% of retail traders fail. What are they doing? And what are you doing that's the same as what they do? Can you learn from it? That's why I call that Trader Groundhog Day. So in the TraderLab, we have a tool called error cost calculator. If you can see tangibly what it costs. Now, what I did when I saw these losses, I wrote a check out and I pasted it on my monitor. Back in the day when we still had paper checks, and I did this for myself, I think in the late 1990s or something. I can't quite remember. But, and it was astonishing to me. Every day I I sat down to trade, I had to look at this thing, this check, and it just gave me resolve. And then I had to work on and understand what the problem was. Nobody was talking about psychology when I started out. It wasn't discussed at all. It was not discussed that this is gaming theory, not prediction, not being right. Nobody talked about it. So, back here. So, going to the moon, right? So what do I know? Support, sweep, looking for the break, goes high. What does that tell me? Too low. Support, watch. Up here, resistance, watch. High volume is there, microstructure. So the sellers are here, buyers are there. High volume is there. This is your retail price in this. Get above here, go into the moon. Watch. Break low. Trigger. High volume. I'm not paying that. The first suggestion of maybe we found too high. Here's how you might know. Sellers, clueless. Absorption. Sellers are here. And where's my buyers? Buyers are there. You see this delta? That's absorption. There's the iceberg. Why didn't it go below here? The buyers are here, right here. What about up here? I got my buyers. What about here? I got my buyers. Going to the moon. I got my sellers, I got my buyers, I got my high volume. This is my fair price. If this price is too low, I go north. If it's too high, I break low. If I break low, there could be trouble for the long. Do I know? No. Where's my next support? Here. So I have here for support, here for resistance. This is a trigger, and let's see what it does. Where's my volume? Wasn't it there? Isn't the outside here? Do we see the sellers take control? Do we see the sellers under the buyers? Under the buyers. And then what do I get? Rotation. And here's the question for this astute group of traders. What is happening here? The sellers that were here, when it comes back up, they're going, oh yeah? Here, have some more. All right. Watch. Now, where's my support? Wasn't it here? Where's my resistance? Watch. Now, again, I don't know. What do I know? Well, I know I hit my target. I know I've gotten the short squeezed, and I don't know if I'm going to get additional buying, except the higher time frame is down. Isn't that what we know? Yes? No? Maybe? Notice the liquidity comes back in. Oh, really? More icebergs. More icebergs. Stop an iceberg detector. What's happening here? We're out of here. Have some more. Short, 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 TraderLab. And what we're trying to do at this point, if we run out of buyers, what do we got now in here? Would you say maybe sell stops? Opening, wherever the opening swing low is, lost it already. Oh, it's way down here. Sell stops, and now let's watch. And this is the mean. Let's just see what goes on. Wasn't this support? Whoop, this. Watch. Now, I'm showing you some broad strokes, but all you can learn this. But guess what? No plug and play. I know. That's what you're sold, but it doesn't exist. If this is too high and I break low, I can sell this, and I'm trying to go here. Okay? If I sell this, where's resistance? It's here. Am I putting my stop there? Remember, what's sitting here? Buy stops. Do you want to join the risk-averse retail traders who do not have sustainability, over 90% fail? Why? Because I have a little something I came up with, and I share this in TraderLab. Think like a retail trader. Don't act like one. Your impulses are not based on a business model. They're based on fear. And the fear is wired into us for survival. Your primal wiring cannot differentiate between a saber-toothed tiger and this. So we are risk adverse. So we automatically, if we sell this, we're going to put our stop here. Isn't that what most of you want to do? Listen carefully. What you want to do? Who makes the decision on how you run your business? Is it your risk aversion, your FOMO, your fear of loss, or is it a business plan that you have vetted that has told you over a random distribution of outcomes that putting your stop here, potentially, and you have to vet this, takes you out of trades that would pay? And over time, you're still going to take stops being here. But let me ask you a question. Where does this trade fail? It does not fail there. What happens if you get picked off here? Here's another thing. Is this a short? It's the same trade. It's the same trade. What happened? All it did was come up and take stops. Same reason it's going to potentially go down is the same reason it counter rotates. And if I get my sellers, what's now over here? Buy stops. And of course, buy stops, and buy stops, right? Do you want to put your stop there? You can answer the question. Now let's go further. What do I know? I have a sell sweep here. So I think or suspect that we're on our way south of the border. Don't know. Where's my retail price in the developing daily time frame? Multiple time frames. It's here. If I find too high, remember, I'm not paying that, and I break below what was support over here, I can sell this, and I'm trying to go here. I pull back, I can sell this, and I'm trying to go there. Okay? Now, VPOC migration. Watch. Now, you're going to see me doing something that's the opposite from the other side of what we did on the longs. Too high. By the way, in trading, I always use the term horseshoes and hand grenades. It's levels. And it isn't walls. There's levels. And the other part about a level like this is, I also always know, see, this is a sell trigger here, that there's going to be buy stops over here. Don't you know that? Well, I know it. You know how I know? Same reason you do. But I don't make my choices and decisions based on risk aversion. I have already done that probably 40 years ago. I know that there's stops there. So if I know that, if suppose I wasn't short here, this says counter rotation, sell sweeps. Now it doesn't say it will, it says it might. Watch. I come up here, pick the stops. I also know that retail traders put their stops here. Think like a retail trader, don't act like one. If I get the stops coming out and I have another trigger, I could sell it here. Break. Now, since I took these stops out, I can put my stop here. Does that make sense? And again, now, VPOC migration. Let's come back. What do I know? Retail price, target, from this or this or this, whatever. Now, this is my watch. This shifts up. Now, this is what I call a VPOC migration structured trade. Now, there's a lot of trades, that you can take, and you need to understand, again, this is a business of risk reward, statistical probabilities, not activity. The more trades you take, have you ever thought of this? The more risk you're taking. Doesn't make, and you can figure this out if you do the work, and you can find this in TraderLab. What rotation covers your risk? It is not most of us when we start, it's about percentage of profitability. In other words, gee, I got an 80% win rate. I'm going to make a fortune. I'm going to have an ATM in the basement. The problem with that is you're probably risking more with less pay, if you even have a winning trade, when you start tightening up because you're focused on the wrong thing. You don't need a high win rate. What you need is rotations and profits over a large sample size, so you can afford to take the stops that you have to take. Why do we take stops? Because it's random. What is the difference between this trade and this trade? They're the same trades. Isn't this random? Now, I understand as an experienced trader that there's stops here. You do too. So wouldn't you maybe take that into consideration as you're building your plan to research where your stop ought to go? Because by limiting my quote risk, how much am I taken out by? 1.5? Is it worth 6 ticks to you to miss all this by getting taken out and now being emotional and being upset and not re-engaging? Just a question. VPOC migration, new retail price. Let's remember, what can it do? Up or down. Watch, look in here. So right here it's up or break, too high. I can sell this for continuation. Let's just keep an eye on it now. What do you think? Oh, back into the opening swing. And and back inside the ETH range. And let's keep going. This is a target coming down. Remember, this was too low. Notice the liquidity comes back in the book. If you're short from wherever, you could be short from here, short from up above. You'll notice what is sitting here. Variable high volume node. Right? I got to label it. So I use the high volume, and the reason is that it's the shoppers. At one point here, they thought this was too low. Notice the liquidity. What do they want to do? They're going to use the volume also. Sweep, sell sweep into this suggests a counter rotation. So this right here is a potential target. I see my sweep. That suggests higher. Let's watch. And there's more. Yesterday's range, another target, right? I'm under the opening. Wait, losing my brain here. Hold on a second. just got to look over here. Okay, opening swing low is what I'm actually looking for. Do you notice something of interest? Too high, break low, shift down, too high. So, too high, south of the border. And you're trying to come out the bottom, don't forget, the opening swing low. So you come down here, you get the stops. Let's look at it from this angle, okay? Now, I wonder if I can get into, I don't have time for real time. I'd love to. You know, guys, if you're interested in seeing this in real time, in the TraderLab community, which is open to all of you guys, there's, remember, no cost for it. But it's not romper room, you know, so it's not like some of the things you might have done in the past. This is about the business, so it's a serious leveraged community. Doesn't matter how long you've been trading, what you do, how you do it, what product you trade. What this is about is understanding market mechanics, how the market works, why it does what it does. So the idea of this is that you understand what might happen, where it might happen. And all of these webinars that I've done in streams over maybe 4 years, many of them, you can find them out in YouTube world if you, you know, search Tom B, TraderLab, that kind of thing. But you could also find in the library in the TraderLab streams up to 4.5 hours long of real-time narration. And I think you may find it interesting to see this stuff in real time. But my objective here is to show you process so you can see there's a methodology to this, not a predictability. So what do we know? Opening swing low, what's under here? Remember the longs? Sell stops inside of yesterday's range. Notice what happens here. Let's put a little box around it. It's important. And what do I know? Now again, hindsight, I know plenty. As it's happening, clueless. So what I know here is I get my stops. Remember, my stops are under the opening swing low. The stops are coming out. This is sitting in the book. The buyers are sitting here. And I get my iceberg, and there's my reaction. So now, how do I deal with this? Well, I know resistance is up here, and I know if I come back above, I have to have a trade management process. Now, I don't go into that too much. I give you ideas, but I can't tell you how to manage your trade. That is a time frame based process. However, if the trend is down, then all I'm going to do, subject to, again, time frame or rotations that you trade, is sell. I already did my buying, and I've taken out the opening swing low, and at 9:30 Central Time, there's something called the IB stat, first hour's high or low, 98% probability. I'm going to ask this astute group of traders, which one do you think is going to go? First hour's high or first hour's low? I'm going to step out on a limb and say, if the trend is down, and I took out the weak shorts, that's what a squeeze is. Now I have the longs who just got thrown out over here, all the longs, and now if I get a counter rotation, are these buyers or short coverers? What do you think? Now it's probably both, but what do you think is happening when we come up? Who is getting taken out now? Isn't it? So if we just took the longs out from this morning, what's the condition of the market? Isn't it short? So that can give me a counter rotation. At 9:30 Central Time, my time, I have a 98% probability of taking out the first hour's high or low. Trend down. So what does that do for me? What it does for me is says get short. Now the problem naturally is from where? Let's look. And none of these are recommendations. What this is a methodology, not predictive. I know when you want to just be right. Okay, sit in front of the monitor. Louis, move the 2 ATMs in the basement. One's not going to be enough, right? So let's look. Let's look at some structure. What this is here is a consolidation, right? too high, chop, chop, chop. Buyers are here. There's your sweeps, says counter rotation. Buyers are here. Sellers are there. I'm not paying that. Yeah, but it's on sale. Break low. Okay? So we break low basically there. Too high. Too high. So shorts. You could sell this too if you want. This is the VWAP. If you sold this, this is a trigger. That's a trigger. There's your test. And where are you going to try to go? Well, we know about this. Or you're just trailing. You know, it's whatever. You get this. Don't forget 930, which is now here. I have over 98% probability to take this out. Let me extend this. Too high, too high. These are shorts. And where I'm going to try to go, I'm going to try to get under here. This is your IB. This is a structured trade. So here I come down. This is absorption. Remember where the support is. Where was it? There, there, there. Everybody with me? Watch. Where's my resistance? This is the IB continuation trade. These are available in those 60 PDFs in the TraderLab that I shared. Again, these are trades I made up for myself many years ago. And when I say made them up, you don't realize how many years of research and dead ends. I call it Trader Groundhog Day. Random winners without edge. I always thought, gee, I have winning trades. Can't I just make it better? Well, yeah, except that was the problem. Anyway, support. You see it? Support. This says counter rotation. I have choices. Subject to my skill set, I can be looking anywhere to sell these. But let's assume I'm asleep at the switch, you know. This is a structured trade. So this is a trade you can learn in TraderLab. It's a short there, it's a short there, and it's a short up in here. And you're trying to go to zero, you know, wherever that is. It's called the IB continuation trade, IBC. Oh, there you go. What else you got here? Does this look familiar? Structured trade. Any questions, guys? How we doing? I know I'm almost out of time. I really wish I had more time. Shorts, shorts, shorts. So what do you do with these shorts? What do you do? I put the trade on. What am I supposed to do with it? Great question. Let's see if we can figure that out. VPOC migration. What does it say? Language, Tom. Too high. So fair price. Here's how this would work. This is an outside edge, low volume area. Remember how this works? I'm not paying that. Yeah, but it's on sale. And we rotate. This is rotational day trading. You know, this is what we're trading, rotations. Well, what else do I know? Let's come back. Buy stops, buy stops, buy stops, buy stops. Sweep. This also sets up a short here too. But you got to be very conscious. What does the market do? Market goes down to go up, resistance, goes up to go down, goes down to go up, goes up to go down. Higher time frame is down, right? Goes down to go up, goes up to go down, goes down to go up. See, it rotates over itself, right? So the trade plan is really about alignment. Put your helmet on, take your stop, fine. What is a stop? Overhead, cost of production. Now we feel like we're wounded. It's like a personal failure. I wasn't right. Do you understand that right has nothing to do with the outcome of the trade? That being right has to do with following a vetted plan that has an edge? Do you understand that this is gaming and not a video game? And of course, not about being right. Being right is having a plan with an edge, and then it's sampling the market. Where is my edge going to show up? Well, let's assume I have pick a number, a 60% probability. I'm making it up. Well, 40% of the time or more, I can have 10 losers in a row and still have a 60% edge. But what do you do in me? Abandon things, move on to the next thing. Can't handle the losses. If you don't keep metrics, you don't understand. You can have strings of losses, strings of winners. And the way gaming works, think of casinos, is they do pay to gamblers. They don't change anything. Their game, and for us it's structured trades, or you call them setups, we just have to sample the market. It's not right, wrong. The outcome is random. How can you be right? How can you be wrong if you're following a plan with an edge? Only thing that's right or wrong is whether or not you follow your plan. The outcome of the trade is random. So instead of this, I need to be right, all this stuff, it's strictly psychological. What you need to understand is that you're sampling the market for locations. You're sampling. Look at the liquidity. Sampling, sweep, hasta la vista. What does the sell sweep say? Counter rotation. What about this? What's the quote trend? Anybody have a wild guess on trend? Higher time frame down. What did we do this morning? We fulfilled yesterday's plan. Who knew? That's life. Nobody knows. Random. What are we trying to do here? Align with the dominant side. What's the dominant side? Potentially south of the border until it changes. Does that make sense? These trades that I'm sharing with you here, and these are not mechanical. Remember, they're here in these 60 PDFs. And some of this is research. I was working with Bookmap developers. This is back in 2020, and was working on an add-on idea. Some of this has been incorporated into current add-ons, and a lot of it has been, as they say, jettisoned. But this was all. A lot of this is research, and these are just the trades I shared. So there's a bunch of these. Like I say, these are live, and others are just screenshots. I'm never intended to be doing this. It's just this is the NQ. Traders are asking me, what are you doing? This is order flow phenomena. I was actually live here. I was short. And this is a bracketing algo. That you notice how they pull and push. I exited. As soon as I saw this, I said, uh-oh. Think of it like somebody turning the heat up on a pot and somebody taking the lid off. Explosion. I got out right there. Notice, as soon as I saw the change, I hit the canopy blows off and you're out. Does this make sense? This is how order flow might help you. And again, there's no secret sauce. Okay? There's no secret sauce. You got to do the work, and the outcome will always be random. Please give a like if you're visiting in YouTube. More research, okay, guys? A lot of crazy stuff in here. Give a like. Use the link in the bottom of YouTube if you want to visit the TraderLab community. Remember, it's about the business. It's not romper room. You do need to verify your Discord username. You can use a link down below, and there's a lot of additional education available to you. You don't have to be a Bookmap subscriber. Currently, this is available to everyone at no cost. I would suggest, if you're interested in the business of trading, that you visit the TraderLab. Don't forget to give a like if you're in YouTube. And if you are in YouTube, thanks so much for visiting TraderLab today. And for all the participants in the TraderLab community, thanks for making it a very special place for serious traders. Look forward to seeing you guys tomorrow. And thanks so much for visiting the TraderLab today.